when I talked to Wences about this, how he explained it, which makes a lot of sense to me, is there are a lot of countries that will never look at Bitcoin credibly, even if they support it. The US may be one of those, but there's an increasing body of countries that will become dual currency. And they will look at their local currency, and then they will look at Bitcoin. And they will say both of these two things are needed. One, when you're transacting on a daily basis for random goods and services. And two, when you need to buy a permanent asset that needs to have residual value, you'll use something like BTC. And I think that's a very powerful concept. And if you look at what this price chart could indicate, is that if this thing starts to get to these levels of appreciation, it is going to completely replace gold and start to become...
January, wow. Days before the U.S. Securities and Exchange Commission approved 11 spot Bitcoin exchange traded funds, billionaire investor Chamath Palihapitiya predicted that 2024 would be Bitcoin's most important year since its launch in 2009, and that the ETFs would significantly impact the leading cryptocurrency by market cap in the year's first episode of the popular All-In podcast. Cha's second forecast was that ETF demand will make Bitcoin mainstream again. The billionaire also predicted that Bitcoin would become so widely known and accepted that even boomers who have been strongly opposed to it would be able to easily buy and hold the crypto asset. Chat's final prediction was that Bitcoin would become part of the traditional financial lexicon by 2024. The ETFs have been approved and reportedly broken records that even Chamath could not have envisioned. In the latest episode of the All-In podcast, Chi emphasizes the importance of ETFs in the halving event, predicting a huge bull run for Bitcoin in the coming months. The billionaire notes that in previous cycles, Bitcoin's price remained in the same range within 3 to 6 months after the halving events, but after the 6th month,
is because we just had the halving at the end of April.
When did that happen?
The halving is where, just for folks that don't know, the way that Bitcoins are created is by solving these complex mathematical algorithms that take a lot of time and energy and money. And when you solve it, you get rewarded with some number of Bitcoin. And roughly every 4 years, that reward gets cut in half. It's called a halving. And this week, I saw somebody who reminded me all of this. And I just want to give this guy a proper shout out. So his name is Wences Casares. And Wences in Silicon Valley, I would say, really was agent zero of Bitcoin. He was the one in 2010 that introduced it to me. I remember he reminded me of the story, actually. We were at Oren's Hummus. And he's like, he's Argentinian. He's a great. So I'm going to try to copy. He's like, Chamath, you need to buy the Bitcoin. So I heard the story. I fell in love with it. I remember I called my family office. I'm like, buy me 1 million of these things. And he was like, or $1 million worth. And he was like, are you crazy? And I was like, no, this is just a little appetizer. We'll get to the main course. Anyways, he has done a phenomenal job of understanding and proselytizing Bitcoin. And I want to thank him because he really put me onto this. But he mentioned something to me when I saw him a couple of days ago, which is you should really look at the pattern of Bitcoin after a halving. And so I was really curious. And so I had a guy on my team, Quentin, put this together. So Nick, let's go to the first page. So why is this interesting? So here's a little Bitcoin price analysis for you guys. So there's been a couple of halving cycles that have happened. And I asked him to go back and look at the price performance 1 month after a halving, 3 months, 6 months, 9 months, 12 months, and 18 months after a halving. And what you notice is that there are these moments initially where essentially when you go through a Bitcoin halving, people are sort of reassessing what's happening and they're trying to figure it out. That's sort of what I would say happens in the first month and roughly what also happens in the first 3 months. But then within 6 months to a year and 18 months of these things, there are these crazy price appreciation cycles that happen. So that's what this page shows, which is, 18 months after the first halving, the Bitcoin price returned 45x. After the second halving, it returned almost 28x. And after this third halving, it returned almost an 8x, which is really incredible returns in such a short period of time. If you go to the next page. And so if you graph that, this is what it starts to show, which is what is this price performance after each of these halving cycles. Now, why is that interesting? Well, it's interesting because on top of this halving, which theoretically, if history is a guide, we should see some price appreciation. Obviously, the other thing that's happened is we've commercialized Bitcoin. And we talked about this sort of as my big prediction for 2024, which is these ETFs are really going to allow Bitcoin to cross the chasm and have its sort of central key moment, right? And so if you apply the averages, and again, these are just averages, they're by no means predictions. Okay, so I just want to qualify that.
Yeah,
These are
this
just
is not financial advice.
This is not financial advice. These are just guesses.
Data.
We took these and we applied it to the price of Bitcoin. And if you go to the next page, you start to see what could happen if you just take the average of the last few cycles. So because the first cycle was so extreme, and you start to
so you're just doing cycle 2 and 3 here, to be clear.
Just the averages of cycle 2 and 3. And what you start to see is some really meaningful appreciation. And when I talked to Wences about this, how he explained it, which makes a lot of sense to me, is there are a lot of countries that will never look at Bitcoin credibly, even if they support it. The US may be one of those. But there's an increasing body of countries that will become dual currency. And they will look at their local currency, and then they will look at Bitcoin. And they will say both of these two things are needed. One, when you're transacting on a daily basis for random goods and services. And two, when you need to buy a permanent asset that needs to have residual value, you'll use something like BTC. And I think that's a very powerful concept. And if you look at what this price chart could indicate, is that if this thing starts to get to these levels of appreciation, it is going to completely replace gold and start to become something that has transactional utility for hard assets. And I think if you marry that with this worry that some folks have about dollar debasement.
According to Chamath's analysis, Bitcoin could reach more than $500,000 per coin by October 2025, which is exactly 18 months after the last Hing cycle ended. However, the chart shows that prices could go even higher, with Bitcoin hitting an amazing $1.14 million if the average of cycles 2 and 3 is used. The chart shows that Bitcoin did 45.52x 18 months after the first Hing, 27.92x after the second, and 7.8x 18 months after the third Hing. Even if this cycle is slowed down like the 2021 cycle, experts like Chamath still expect Bitcoin prices to go much higher before the cycle ends in 2025.
There's a plausible case where 40 million of those folks show up, because you're talking about a structural part of their wealth creation, right? So, for example, President Biden talked about giving people a head start by eliminating their debt. That's a narrow issue. And the reason it's a narrow issue, there's just as many people that don't have debt and just as many people that paid off their debt. And it creates a lot of haves and have-nots, right? And there's all these rules around who will get the debt relief, et cetera. You end up touching 4 or 5 million people maximum. But if there are 50 million people who have now decided to have at least a hedge against the establishment and the traditional financial system, a cycle where very large monolithic software was replaced by these SaaS vendors, and Salesforce led that charge, and they led in many ways, the definition of the cloud. So that was amazing. That was this one big cycle. And before that, those monolithic software vendors were replacing like mainframes and very archaic stuff. This is sort of this third disruptive cycle. We're going to go through a process of ripping and replacing these legacy products. And so Gen AI is just an enablement layer that allows you to deliver functionality to people. And I think what you're going to find is that it allows you to deliver that functionality at much, much cheaper. To your point, that's the whole point of 80/90. And we always joke, is Salesforce going to get 80/90? Yeah, because you can deliver 80% of the features at a 90% discount pretty easily today. And what you can't deliver today will get much, much easier in a year and 2 years and 3 years, for sure in 10 years. So I think what the market is voting with their dollars is that these large, lumpy, monolithic software companies that need big $50, $100 million customers, they're not going to find them soon, because those customers will realize that you could get, what Friedberg said, what you need for 10 million or 5 million or 1 million or 500,000, and in some cases free. And so the cost structure of your organization makes no sense. And so you're going to have to go through this very complicated cycle of recycling the business model, which unfortunately will mean tons of layoffs. And that's not a today thing, but over these next 5 and 10 years, that's probably what's going to happen. And it doesn't mean Salesforce is a bad company. It's just that it is on the wrong side of the life cycle. And the odds are overwhelmingly such that a bunch of small companies will flood this opportunity and provide cheaper, smaller, more flexible capabilities. I think typically these public market investors internalize a bunch of fears and they don't execute on those fears. And then when given an opportunity, they just barf it all out because it's like now it's acceptable. And so to your point, David, like it was such like an insignificant revenue miss so as to not even be important, quite honestly. But the reason it's down 20% is I think folks have internalized a different set of risks. And then they've found an escape hatch where they have plausible deniability for selling.
According to new S1 filings shared by Bloomberg ETF analysts on Twitter, Cathie Woods' company ARK Invest has dropped out of the race to create a spot Ether ETF. The only name listed as a possible issuer of the 21 shares core Ethereum ETF is that of ARK's partner 21 Shares. This is a surprising development that was explained in a statement. ARK said, ARK is proud to be one of the few Bitcoin ETF filings that the SEC approved in January. We remain fully committed to the ARK 21 Shares Bitcoin ETF because we believe Bitcoin is a public good that everyone should be able to access at a low cost. As for Ethereum, ARK believes in the long-term value and transformative potential of the Ethereum blockchain. But at this time, ARK will not be moving forward with an Ethereum ETF. Instead, we will continue looking for efficient ways to expose our investors to this new technology in a way that lets it deliver all of its benefits. What do you think the reason is for this quick change? Please share your thoughts and answers about Chamath analysis and Bitcoin price predictions in the area below for comments. Also, make sure you like this video, subscribe to the channel, and turn on post notifications to see more videos like this. Thanks for watching.